Welcome back. In our top business story, Abu Dhabi's Department of Finance has stepped up its review of public spending by government-owned companies in recent weeks, sources told Reuters. At least 9 Abu Dhabi-controlled companies changed their top management this year, including investment vehicle Mubadala and developer Alda, as the government seeks to manage its vast wealth more effectively. The sources said a plan to centralize fundraising and curb bond and loan issuances had gained momentum. In the past, the Abu Dhabi government criticized some state-owned entities for tapping the bond market or taking up bank loans too excessively. Abu Dhabi's Union National Bank is said to meet bond investors in the United Arab Emirates on September 25th as it launches its roadshow for its potential bond issue. The roadshow in the UAE will be followed by meetings with potential bond investors in Singapore and Hong Kong, 2 sources told Reuters. Many UAE companies have been eyeing the bond market for fresh sources of funding, as UAE banks are considered stable and well capitalized, and therefore the yield they would have to pay are at the moment comparatively low. It's a different picture, for instance, over in Europe, where liquidity issues have hit especially French banks quite hard of late. France's largest bank, BNP Paribas, for instance, will tour the Middle East in a bid to raise fresh capital. There's nothing like a Porsche, more and more people in Dubai must think, because its local dealer of the German sports car brand broke the global sales record in August. According to press reports, the Porsche Center Dubai sold 211 of Porsche's fast cars during Ramadan. That's the strongest performance for any Porsche showroom globally, the company said. Between January and August, Porsche delivered 46% more of its luxury cars than during the same time last year, indicating a booming market in Dubai that is bucking the recent economic gloom in Europe and the US. Most stocks in the UAE fell today, however, DP World bucked the trend. The Dubai government-controlled port operator has said Port and Free Zone World has refinanced an $850 million debt facility secured in part against some of its shares in DP World. DP World shares were up 0.5%, and with that, let's now look at the stock indices across the GCC. And in our international news, the U.S. Federal Reserve late yesterday unveiled the details of a new $400 billion plan to help boost the U.S. economy. Dubbed Operation Twist, the U.S. Central Bank will purchase $400 billion of long-term debt while selling an equal amount of shorter-term securities. And that is called doing the twist, because with this shift on its balance sheet, the Fed pushes down the longer-term yields, a step it hopes will give the economy a boost when borrowing for companies and homeowners becomes even cheaper. Meanwhile, the Fed funds rate, its main interest rate, will remain close to zero, as the Fed sees a subdued inflation outlook, at least for now. Also, the Fed aims at boosting the dismal U.S. housing market. It said it will also reinvest proceeds from other housing-related investments back into the mortgage market. However, if all these steps agreed by the Fed yesterday will in fact have a positive impact on the economy remains to be seen. The Fed's action got a mixed reception from investors, with stocks moving sharply lower in Asia and Europe due to the Fed's dismal economic outlook. At least one thing worked: long-term yields on U.S. Treasuries fell as the Fed intended to. We have Bruce Powers, Head of Research at Trust Securities, here with us to talk about the issue. Welcome, Bruce.
Hi, Linda.
Why this heavy sell-off today, with the markets in Europe, for instance, being down 5%, 4%? The Operation Twist was expected, was it not?
Yes, it was, but apparently some investors were hoping for a larger intervention, including some asset purchases. It also didn't help that the Federal Reserve said that they see significant downside risk in the economy. Also, on a technical basis, many markets have been setting up recently for further declines. They were just waiting for a reason. Now, a lot of investors have been complaining recently about all the uncertainty. Now we have a lot more certainty. The outlook is bearish. Now, if we look at Shanghai, Germany, and Hong Kong have remained under pressure ever since the sell-off in early August. These might be the first markets to find a bottom, although it's also reflective of their relative strength because they're leading the market lower, the markets overall lower.
That's exactly what I want to talk to you about. Have the markets maybe now finally found a bottom after these sharp sell-offs in recent weeks?
Well, this should really be seen as a continuation of the sell-off that started in early August. I wouldn't be looking for a bottom yet. Of course, there's going to be a number of bounces on the way down. I would not look at these as opportunities to buy necessarily. I'd look to get out of long positions, maybe enter short positions. A number of markets have rallied off the August bottoms, and they are just beginning new drops. So I think we have quite a bit of downside risk still. We've seen some of the major sectors that have led the market down have been resource, energy, financials, real estate, many of the companies that are affected by the economy.
So you're advising us to remain put at the moment?
Remain safe right now. Don't jump into the market. This is probably just the beginning of further declines, even though we will see rallies in between.
Okay. Thank you very much, Bruce Powers.
Thank you.
The UK's economic outlook is weakening. Therefore, the government should reconsider its deficit reduction plan, the International Monetary Fund warned. The IMF cut its growth outlook for Britain. It now forecasts the economy to grow by only 1.1% this year and not by 1.5% as previously anticipated. And next year, a GDP growth of 1.6% is expected, down from 2.3%. The Bank of England already signalled it will begin pumping money into the economy to encourage growth, possibly as soon as October. But it is the UK's key export market that's the problem, the Eurozone, which continues to falter.
All the signs are now we're heading towards another crisis. Now, at some stage, it must, occur to the leaders of the Eurozone that the best thing to do when you've got a problem is to deal with it and deal with it decisively, and that has not happened yet.
Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have the day's sports news for you.